Hello traders, Yolanda here with extraordinarytrading.com. Guys, I am creating this video in response to a question from a subscriber who asked for some advice on where to place stop losses. Now, I remember, the challenges with, not knowing how to identify a trend, not knowing where to place my profit target, not knowing where to place my stop loss. So we've all been there. It's not necessarily that traders don't want to place a stop loss. They frequently just don't know where to put it, just like they don't know where to put their profit target. Okay. So what you see is a lot of traders will just have a standard stop loss and profit target. So standard profit target and stop loss of 10 pips or 20 pips or 50 pips or whatever the number may be. That is a good first step, but ultimately you want to get to a place where you are placing your stop losses based on price action and support and resistance. That's how I rack up just hundreds and hundreds of pips each week. Okay, that's the ultimate. However, if you are a newer trader, you probably aren't there yet. You're not at the place where you can trade price action really well or necessarily identify support and resistance levels, which is pretty easy to do, the latter. So I am going to show you a strategy that I have used in the past that is a profitable strategy, okay? Another thing that I will tell you before I walk you through this strategy is that, most traders are focused on becoming this, elite trader. And that's a great goal to have. However, realistically, it's like the chances of someone becoming an elite trader is like the chances of becoming the CEO of a Fortune 500 company. It's just reality. And I'm not saying that to discourage anyone. I'm just saying that's realistically what it's like. So the advice I would give you, and this is what I would do. If I were starting all over, this is what I would do. I would focus on growing my account, doing whatever it takes to grow my account. Because what you will find is a lot of wealthy traders are mediocre traders. Many of them are. However, they make a lot of money from trading because they have huge accounts. If you've got a big account and you can put on a trade and go for a 10 pip profit and you make $40,000 or $50,000 off of that, you don't need to be a great trader really in order to make a lot of money. Okay, you do need to know how to get out of the trade if it goes against you. But I'm saying that just because someone is a wealthy trader does not mean that they are a great trader. And if I had to start my trading career all over again, I would focus on account growth. I wouldn't downplay the importance of developing good trading skills because that is important, but I would treat account growth as equally as important. Okay? Just my tip. Take it for what it's worth to you. So I am going to show you this strategy that will help you with planning your entries as well as helping you with knowing how to exit a trade. And like I said, this is not the ultimate state where you want to be, but it will help you get there, okay? So what I've got on my chart here are Bollinger bands, okay? Most of you have probably heard of Bollinger bands, okay? What you want to do is see price move to the upper. Like if you're taking a buy position, you want to see price move into the upper band. And here's your ideal entry, okay? You want to see price close outside the upper Bollinger band and then pull back like right here, pull back to the middle band, but not close beneath it. This is where you will buy, okay? And this will also help you to start learning price action too. Okay, stay in that trade. So you're buying right here. You see here where price, this green candle, price came down here, crossed the middle band, but it didn't close underneath it, okay? So you're buying right away as soon as that candle closes. But you're not putting your stop loss too close because as you can see on this candle here, it came down lower. Don't smother your trades, guys. You hear me say this all the time. Don't smother your trades. You don't want to chop up your account. And one piece of advice, I'm going to take a little sidebar conversation quickly, is one piece of advice I will give you, and this is something where I don't agree with what a lot of traders say. You hear people say, cut your losses quickly, and there is some truth to that. But you don't want to keep chopping up your account. You don't want to keep chipping away at your account. So where your account balance is so small because you've taken 50 trades in a day and 40 losses. I'm telling you, I don't trade like that. I don't. And I can grow accounts really quickly. I can rack up easily hundreds of pips a week. I don't trade like that. I wait for price action to prove to me that my trade direction is wrong, and then I get out of the trade. But like I said, until you get to that point, this is a good solution for you, okay? So we're going back to upper Bollinger Band. Price is closed outside the band. Price comes back to this middle band. It doesn't close underneath it. You're buying here. You're not smothering your stop loss. Put your stop loss underneath this lower band, okay? Keep it away. You don't want it to be easily hit, okay? Stay in the trade until price closes above the upper band again. When it closes inside the band, close out half of your position. Depending on what software you have, you may have, one big position that you can close out a portion of, or you may have to take multiple orders, okay? If you need to take multiple orders, have 2 positions on. Close one position, okay? Because at this point, you don't know if price is reversing or it's going to retrace deeper or whatever. So just take some profits, okay? Now, in this case, as you can see, price continued to the upside. So you've still got 1 position on. And you're getting all this profit here, okay? Again, price came in, closed inside the upper Bollinger Band. This is a good time to just take out the other order that you've got on, okay? And it would have been pretty good timing because as you can see here, came all the way down. Now, say that you were still in the trade. For some reason, you didn't see price come and close inside this upper band. Your emergency absolutely have to get out exit would be exiting when price closes underneath this middle band. Okay? Now here's the thing. Just because price closes underneath this middle band does not mean that price is switching to a downtrend. Okay? It could mean that price is just retracing deeper and then it's going to reverse upward. So this particular strategy is not going to allow you to get every single pip out of the market. That's where price action and support and resistance levels come in. And look, you can see it right here. So price came, closed underneath this middle band, went all the way down, came and closed underneath this lower band. But you wouldn't want to be selling here because this is an uptrend. All this is here is a pullback of the uptrend. Okay? And as you get better with trading, you'll start to see this. So, because I'm a swing trader, this is where I would be buying. I love to see these type of moves because this is where I get in. Especially if this move was at support too. Oh, I'd be in here. No doubt I'd be buying. Okay? So, don't beat yourself up if price comes in, closes underneath the middle band, and you're out, and then you see price take off. So price could have came back up here and took off. Don't beat yourself up because you missed out. This is really just an introductory strategy. This is a strategy that's just going to help you to build your account. It's not the ultimate, but it will allow you to make some profits, okay? So once you get better at reading price action, then you can take trades like this where you see that, okay, price came in here, closed underneath the middle Bollinger Band, came and crossed close underneath this lower band, bam, I'm in there, buy, that's a next step up. Okay. If you need to use technical indicators, and I totally get it. When you are a newer trader, especially trading Forex, it is difficult to trade without technical indicators. It's hard to figure out what the trend is. I remember, the days of looking at my charts and saying, how in the heck am I supposed to know what direction price is moving in? And I was previously day trading stocks and having some pretty decent success at it. I had like some $12,000 profit days, day trading stocks. So, and that's why I say it's easier to day trade stocks than it is to trade Forex. But this will allow you to put some money in your pocket, okay? If you follow this strategy and just don't beat yourself up because you get out and you see price move against you. So like here, a person might panic and say, oh, shoot, price is going up. And then they buy here and then look, price comes down and then they take a loss. They don't know what to do. This is how people keep chipping away at their account balance. This type of behavior right here. You'll get to the point, if you put in enough effort and keep trying, you'll get to the point where you won't make these type of mistakes. But we've all done it. And if you haven't done it, you probably will at some point. Okay. So I hope this helps. If you have any questions, leave them in the comment section below. And as always, happy trading.